Hello Maverick, Zimri here. Welcome to today's currency recap. It is Tuesday, December 5th, and we have quite a lot to talk about, so let's get right to it. As usual, we'll be conducting a review of the trading day, taking a look at any meaningful news that's come out of the day today. Not a whole lot in the US, but there is some news out of Australia that we'll be taking a look at shortly. We'll also be looking at the broader equity markets and some commodity analysis as well. We'll then be doing some technical analysis on the major indices, taking a look at the currency baskets that we use for our currency analysis, and then looking at any major news reports ahead for the week. And then we're going to wrap things up by taking a look at some cryptocurrency setups and some Forex setups as well. In this currency recap, we'll be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable Forex and crypto trader. Now, Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. So if you're a technical trader with a technically based trading system, we would love to meet you. So, if you're interested, please click the application link in the description below this video. Now let's break down today's market action. So kicking things off with some market analysis. All right, so in news of the day, market's pretty much flat, which has been the theme for December so far, but the dollar's been bid and Bitcoin has soared. Now that's off the back of some ISM services PMI news that's come in slightly above expectations. Is that really enough for it to be a market mover, or is this more of a technical move? I'm leaning towards the latter, but we did have JOLTS job openings come in relatively well below expectations. We were forecasting 9.31 million openings, and we got 8.73 million. Again, is that really enough to talk about dollar strength or weakness one way or the other? I say that the move that we've seen in the buck today is largely technical. But we did get some news out of Australia. So the Aussie the RBA, which is the Australian Central Bank, has held rates where they are, and that was as expected. But what they did say, which wasn't as expected, was that they're questioning whether they need further rate hikes to get the inflation job done, and that sent the Australian dollar sharply lower. Okay, so in terms of market news, you can see here crypto was the asset class that's by far and away led the day today. Stocks pretty much flat, gold slightly down, oil down nearly 1%. And as far as the fiat currency side of things goes, you can see there on the right that the Aussie dollar did indeed get repriced sharply lower today. New Zealand dollar, the second biggest loser. Canadian dollar more or less flat. The pound and the euro and the Swissy up slightly, and then the big winners on the day were the US dollar and the Japanese yen. Taking a look at those cryptos that outperformed today, leading the pack was Bitcoin, up over 4% as of recording. Ethereum also up nearly 1%. Bitcoin Cash more or less flat on the day, same with Litecoin. Okay, so as far as the market outlook goes, we're sticking with a +3, folks. We're still above both moving averages, and the slope of that 20 and 50 period moving average is still clearly pointed higher. Now, when we have a situation like this, there's one of two things that are highly likely to happen. We're going to get some kind of correction. Whether that is a price-based correction or a time-based correction, we don't know yet. But either the market's going to trade sideways, allowing the moving averages to catch up, which would be a time-based correction, or the market is going to pull back into those moving averages, which would be more of a price-based correction. Don't know which one it's going to be yet, but I will say this. I think buying the market at these levels doesn't really make too much sense. I think we're very close to that 46.07 high from July 27th. Makes sense there would be some overhead supply in the stock market here, and I think the Santa Claus rally has just come a little bit earlier than people have expected, and my money is on weakness for the remainder of the month, basically, and then we'll see what 2024 has to say. As far as news events go, tomorrow we've got GDP quarter-over-quarter data coming out of Australia, and in the US we're going to have that ADP non-farm employment change, and then the big news is going to be in Canada, where we're going to get a Bank of Canada rate statement as well as the overnight rate. Please ignore the times here on my forexfactory.com screenshot. I'm actually in Europe right now, so there is a significant time zone difference. So those Canadian rate announcement is not going to be coming out at 4 p.m. Eastern. It's going to be coming out at 10 p.m. Eastern. I'm 6 hours ahead. All right. And Thursday, we're going to have U.S. unemployment claims. And then the big star of the show for this week is going to be non-farm payroll reports coming out on Friday morning, 8:30 a.m. All right, so moving on now into some currency analysis. So as far as our velocity scores go, we've got the dollar and Bitcoin Cash at a +3, Swissy, Bitcoin, and Ethereum at a +2, the yen at a +1, the euro, the pound, the loonie, and Litecoin at a 0, and on the negative side of the spectrum, we have the Aussie at a -2 and the New Zealand dollar at a -3. So I really actually like the pairings that we have right now from the left-hand side of that spectrum towards the right hand, and we're going to take a look at those currency baskets right now to see what we can come up with. Okay, so kicking it off, first is the yen. So check out this trend line that I'm going to draw on the yen here, connecting these two tops. And you can see we're right up against that trend line right now. I think it's pivotal the next session to see whether or not we can break above that trend line or not. If we can, I'm willing to give the yen the benefit of the doubt and look for a little bit of a higher rally towards that October 30th swing point, possibly the swing point from October 3rd or 4th. So that would be this region on the price chart right here. Worth keeping an eye on for sure. On the other hand, if we fail against this trend line, then I'd expect fresh lows in the yen. As far as the dollar goes, dropping down to a 4-hour time frame, you can see here we've kind of broken through this trend line here nicely. I'm now looking to see if the dollar is going to give us some kind of pullback pattern, because here's the thing. We're trading within some resistance right now, so I would expect us to drift. And if we get some kind of base or pullback, then I think we can look for a move higher in the dollar, albeit it might be counter trend back to the highs from November 22nd. All right, so that would be a decent move in the dollar, definitely worth trading for if we get it. In terms of playing the dollar on the short side, we got to zoom in even more. I'd say we'd have to really crack this trend line from the lows, in order to start looking for some moves. But given the fact that we just broke to a new high in the dollar, breaking above the high from November 30th, I'm willing to give the market a little bit, or nearly breaking above that high. I'm willing to give the market here the benefit of the doubt. The only tricky thing is that the RSI is not really revealing too much here. We don't have bearish divergence. We don't have overbought conditions. We're just kind of trading sideways. So is that a sign that the market's going to base, or is it a sign of impending weakness? A little bit too early to say, but I think the parameters are clear. Either look for that sideways basing pattern or look for a sharp break below the trend line. All right, as far as the Swiss franc's concerned, we're still trading within this parallel channel, and I still think we're probably going to get a move lower in the Swissy to at least test that support line. So as of recording, that would bring us back to where we were trading towards the end of November in the Swiss franc. That would definitely be a great move to play on the short side. Okay, the euro. Big move lower in the euro. We've broken through support, which is now resistance. We hit oversold conditions. We've bounced a little bit, but this looks like possibly the makings of a base. I really hope we get a base, because the risk reward on that trade would be fantastic. And we'd be, well, it would be reasonable anyway. I don't know about fantastic, but that would bring us to the lows from the end of September, early October. And if we can break those lows, then I think we can focus on the lows from June, early to mid-June of this year. So potential exciting fireworks in the euro for sure. And I don't think it's too dissimilar, in the pound. That yes, we have been grinding higher, but the keyword here is it's been a grind. This trading pattern in the pound doesn't look particularly impulsive to me. In other words, it doesn't have the makings of strong trending price action. Now, if we go to the daily chart and we throw some moving averages on this chart, on the daily, you can see that prices as of right now are just below the 20, but still above the 50. Kind of in no man's land territory. On the 4-hour chart, it's definitely in no man's land territory. So I'd recommend being patient with the pound and really only taking trades on the pound if you see a very clear setup, because on the currency basket, I don't really see anything here. As far as the Canadian dollar goes, we've kind of cracked that trend line, but not very convincingly. This kind of looks like a bear market rally to me fits nicely within parallel lines, which is something I always like to look for. If we break out the bottom there, then I'd look for us to break below that July 14th low and ultimately put where we were trading back in May into focus. That would be a huge move down in the Canadian dollar. Very exciting to play on the short side. Okay, Aussie dollar. So we failed against this trend line, and we've broken below this upward sloping trend line as well. I think that puts the lows from middle of November, November 13th to November 10th into focus. A little bit of a move lower in Aussie dollar before we find some support. If we completely break through that support, it's a much bigger trade, and I'll be sure to cover that in a future video. But for now, I still like looking for some downside trades in the Aussie, provided they materialize. Okay, the New Zealand dollar is interesting. We have this inverse head and shoulders pattern that we've broken out of, and I'm just sketching the outline of that pattern right now. So you can see how we've broken out the neckline of this pattern. We started breaking out on November 28th, and we're now pulling back to the neckline. That's something that happens fairly commonly with head and shoulders patterns, where the price action pulls back to the neckline after an initial breakout. So if we can get down to that neckline, I'd be looking for some kind of trading pattern that's going to lead the market higher. So for you candlestick folks, that could be an engulfing candlestick. As far as a chart pattern goes, it could be a bullish reversal pattern on a 15-minute chart. It could be a bull pullback pattern on a 1-hour chart. So there's a lot of options. So make sure you're looking for a trade trigger as we approach that area. We're just not quite there yet. So, all right, folks, that wraps up today's currency recap. In conclusion, as always, play relative strength and weakness. It is the easiest way to consistently pull in profits from the Forex market. It's one of the biggest edges that a trader can arm themselves with, is looking closely at relative strength and weakness. Also, remember always, focus on proper position sizing and always, always, always follow your trading plan. All right, traders, that's it for me. Hope you enjoyed the currency recap. Look forward to speaking with you soon. Bye for now.